I saw a headline a few weeks ago about Tesla, and I thought to myself, what's the deal with this company? I've seen a few of those cars on the road, so I decided to pull up the stock chart. It looked pretty rough. Then I decided to look at some articles. It looked even rougher. Then I decided to look up Elon Musk, and I was like, holy shit. This is beginning to remind me of that time I was 6 years old and I tried to put together a solid red jigsaw puzzle with 1,000 pieces in it. And then it all hit me. I couldn't be the only person out there who is totally in the dark on Tesla. I also certainly couldn't be the only person asking myself whether Tesla is a buy or a sell. So I thought, what the hell? You've been digging into stocks for 17 years. How hard could it be to lay it all out there for Tesla? Cue the common sense voice in my head that said,
holy shit, Alex, are you sure? This will take forever. How will you cram all this into a quick video? What about your life? What about your family? Alex, are you there?
But it was too late. I had already started digging. And that's where this stock story all begins. So crack open a cold one and strap yourself in, because it's gonna be a bumpy ride. I'm Alex Hollingsworth, and you're watching the debut episode of A Stock Story. I started this channel because finding good stock info can be like digging in a cat litter box looking for diamonds. And I thought I could create a kick-ass space where you could actually get some solid info. First, let's lay down the ground rules here. You're tuning in for my opinions. It's not financial advice. So if you're tempted to YOLO your kid's college fund on Tesla put or call options, or make any investment at all, do yourself a big favor and chat with your financial advisor first. They will at least give you a greater than 0% probability of keeping your ass out of a future of couch surfing, living off a daily staple of ramen noodles, and muffling your cries into your pillow at night as you dream of faking your disappearance to go live a life of luxury in Tijuana. No, seriously, go get a financial advisor. Now, about that subscribe button. It's probably the only YOLO investment I'd ever recommend. Why? Because you're signing up for a steady stream of quality, kick-ass, and insightful market tips. And remember, if you're going to dive into market research, you may as well have a good time in the process. You only live once, there's no redo. With that said, you ready to dive in? Hit subscribe and let's unravel Tesla's stock story together. All right. Let's hit the rewind button and head back to 2003. Nowadays, people are warming up to electric cars, but back then, they were practically the punchline of a joke. These horrific monstrosities helped pave the way for something better. Into this vacuum of style, we get two unlikely visionaries, Martin Eberhard and Mark Tarpenning, that had a batshit crazy idea that was about to get an avalanche sliding down the mountain after all the other automakers. Tesla wasn't shooting to just be any car company. They were literally flipping the double bird to the gas giants of the world. They wanted to bring sexy electric cars to the masses. Back to Mark and Martin's vision though. It was bold, it was ballsy, and let's be real, most folks back then thought these two guys were headed straight to zero. Anyway though, now we buckle up and hit the fast forward button to 2004. Cue the entrance of Elon Musk. If you've been living in a bunker for the last 20 years, let me drop a fact for you. Even the writer of the Iron Man movie said that Tony Stark was inspired by this guy. That's right. We're talking about the real-life superhero of tech and rockets. Mark and Martin decided to bring Elon into the fold for the Series A round. For those of you who aren't fluent in market speak, Series A is the opening act of private investment in a company. They're labeled in alphabetical order, so if you've got your ABCs down, you'll have no trouble following along. See, Elon had just made a shit ton of money selling PayPal to eBay back in 2002. The full sale was for $1.5 billion.
Billions with a B.
And Elon got $165 million for his stake. In 2004, Tesla kickstarted its operations with a Series A round, where Elon Musk invested $6.35 million, while Martin Eberhard added a mere $75,000. For what it's worth, in each round of investment, Elon continued to lead the charge, plowing more of his money in, with an internal corporate PowerPoint showing Elon as, quote, leading the rounds. I had to dig on archive.org to even find this thing, and I put the link in the description below as well. Tesla's momentum continued with the Series B round in 2006, raising $13 million, with Musk reportedly increasing his financial commitment. However, in 2007, the storm clouds started coming in. See, an audit by one of the first Tesla investors, Valor Equity Partners, revealed Tesla's cost just for the Roadster materials was $140,000, far above the $92,000 price tag the customers had prepaid. To make matters worse, tons of people had already prepaid for the Roadsters, but there wasn't enough money just to build the damn things. This ultimately led to Martin Eberhard getting the boot.
This is insane. You can get out of here.
And a series of interim CEOs taking the helm. In 2008, Musk took over as CEO, steering the company through the storm. As a side note, in May 2009, Martin Eberhard ended up suing Tesla and Elon Musk. I thought this was just some side drama, but when you dig into it all, it becomes clear that this was a serious shit show. Elon wrote this crazy long blog post about it with a bunch of actual emails and correspondence between all the Tesla execs at the time. I put the link in the description for anyone who wants to check it out. Be warned that you will probably need a good recliner and 2 stiff drinks to hold yourself over through this entire thing. To make a long story short, the lawsuit ended up being settled for an undisclosed amount, with Martin Eberhard having to say that Elon Musk was an actual co-founder of the company, but neither of them being able to shit-talk each other after the fact. The funny thing, though, is that Elon just goes baller mode and totally disregards the last part. Life's too short for all this drama, though, so let's get back to the stock story. It's basically been a whirlwind of activity ever since. The Roadster ended up shipping shortly thereafter in February 2008. The Roadster was a kick-ass sports car that proved the old electric clown cars I showed you a few minutes ago were a thing of the past. The Roadster had a range of over 200 miles and could accelerate from 0 to 60 in under 4 seconds. In a little over a year and a half, on June 29, 2010, Tesla's tires hit the road with their IPO. Some of you out there may have heard that phrase, but have no clue what the hell I'm talking about. The IPO is the initial public offering. Think of it like a company's coming out party on Wall Street. The investment banker's goal during the IPO is to hype the stock up so massively that they raise maximum cash, selling shares to the masses. They can use the money to grow the business, keep the debt collectors at bay, or, if we go back a few years to the Tyco scandal of the early 2000s, the IPO can provide a corporation with that extra boost necessary to help eventually bankroll $2 million on an Italian birthday extravaganza, complete with an ice sculpture of the statue of David that pisses vodka. I'm not joking, an actual statue of David that pisses vodka. But anyway, back to Tesla. At the opening bell, adjusted for splits, Tesla opened at $1.27, which as of March 19th, 2024, means Tesla has more than 135x the investment since that time. The IPO brought in a much-needed capital infusion of $226 million. Not only was this a milestone for Tesla, but also for the United States of America, as this was the first U.S. car company to go public since Ford, 54 years earlier in 1956. Tesla stopped production on the Roadster in late 2011 to focus on their next big move.
Model S, same as yours.
Tesla started producing this bad boy back in June of 2012. The Model S has gone through a ton of iterations, starting with the 65 kilowatt-hour battery with a 208-mile range and working its way up to the current 2024 Plaid version with an insane 3-motor all-wheel drive, 1,020 horsepower, and 0 to 60 in 1.99 seconds, and a top speed of 200 miles per hour, currently starting at $89,990. Back to 2012. Tesla began to roll out the supercharger network with 6 stations in California to start. For anyone that doesn't know, the supercharger is a super fast charging station that in its newest version 4 can add up to 250 miles of range in 15 minutes. Now these superchargers are literally everywhere. For the cars though, in early 2012, Tesla announced a new SUV called the Model X that would start production in early 2014. The X hit some snags with the Falcon Wing doors. and ultimately didn't start shipping until September of 2015. The X now also comes in a plaid mode.
They've gone to plaid.
With 3-motor all-wheel drive, a 326-mile range, 1,020 horsepower, 149-mile-per-hour top speed, Falcon wing doors. It also had a third row, and 0 to 60 in 2.5 seconds, making it the quickest SUV in the world.
What happened? I blacked out.
All right. Anyway, with each new model, Tesla has rapidly accelerated its growth, outpacing even its high-performance cars. But quality progress is about a lot more than speed. It's also about execution. At this point, Tesla was the David to the industry's Goliath. Critics doubted, investors bet against them, and some questioned if Tesla would even exist in 10 years. But what if behind the headlines, Tesla was achieving the unimaginable? Let's examine the critics' claims over the years. Back in May of 2014, skeptics said Tesla would never revisit its $260 share price. This was proven wrong within a short matter of months, when in August, Tesla shares went well above $260. In addition to this, there were people that dismissed Tesla's revolutionary impact and doubted its investor appeal. By 2015, Elon Musk predicted profitability once mass market production scaled up and they hit 500,000 cars of annual production, which immediately got everyone scrambling out of the woodworks to say how this was not going to happen. Critics argued Tesla's strategy was backwards, claiming they should start with mass market models instead of high-end cars. They even said Elon Musk was Tesla's worst enemy. So what really happened? First, Tesla launched the Model 3 on schedule in July 2017. This was followed by the Model Y, which was ahead of schedule in 2020. Both models proved Tesla could dial back the race car power without compromising on innovation. In the 500,000 cars by 2020 goal, remember that? Once deemed impossible, that was achieved and exceeded. Despite doubts, the Model 3 and Model Y drove Tesla's deliveries to new heights, confirming its profitable strategy. On average, Tesla has grown its annual compounded deliveries growth at a mind-boggling 72.6% annually since 2010, and has even achieved on average annual growth of 57.2% since 2016. What we've seen from Tesla so far is just the beginning. Impressive as it is, I have a lot more. These achievements are mere stepping stones within a much larger and historic context that the media often overlooks. The narrative is that we are on a battlefield where giants like General Motors, Ford, Toyota, Honda, they're seen as raining fire down on Tesla. Now, let's challenge that narrative with some hard facts. I've analyzed Tesla's revenues and gross profits since their IPO, adjusting them for inflation, alongside those of GM, Ford, Toyota, and Honda. And for any of you wondering, why adjust for inflation? I have a very simple anecdote. If inflation could be counted as real, innovative growth, then the bread bakers of the Weimar Republic would be considered the greatest growth story of all time, as the cost of bread hyperinflated from 160 paper marks in 1922 to 200 billion in less than 1 year. Back to the automakers though. The contrast is staggering. From 2010 to 2023, while traditional auto giants have seen minimal inflation-adjusted growth, Tesla has soared. They've debunked every critic along the way. When I first looked at that chart, I thought, well, Tesla's a growth company starting with tiny revenues, so maybe these other numbers aren't that tiny if we pull Tesla out. So I did just that. The inflation-adjusted revenues are close to flatline. When we annualize these numbers over the past 14 years, we see that Tesla's revenue growth has exceeded inflation by an average 58.2% per year, whereas GM and Ford are barely beating inflation at all, and Toyota and Honda are lagging to inflation every year, which means their revenues are shrinking on a real inflation-adjusted basis. To put in perspective how mind-numbing and consistent these numbers are, I broke them down even further. First, we got 2010 to 2012. Tesla real revenue up almost 245%, blowing the others away, and Honda losing to inflation and to the growth in registered US vehicles on an inflation-adjusted basis. Next, 2013 to 2015, Tesla real revenue up 849%, while everyone else is hitting single digits. Over this period, General Motors lagged inflation pretty significantly. For 2016 to 2018, again, Tesla up 401%, while everyone else is virtually flatlined. It's worth noting that Tesla and Honda were the only ones who grew their inflation-adjusted revenue more than the number of registered vehicles in the USA. So GM and Toyota couldn't keep up with the increase in registered vehicles when you account for inflation. Last, we've got 2019 to 2023. We see Tesla's growth was not quite as meteoric as the prior periods, but still, they beat inflation by over 30% per year. And keep in mind, the last few years have been the most inflationary we've experienced in many decades. Also note during this period that every other of these major players lagged inflation. Look at this red. So keep that in mind when people comment on Tesla's growth story being finished. Even more so, in terms of inflation-adjusted gross profits, Tesla has managed to nearly equal the gross profits of General Motors on this journey, and is also inching close behind both Ford and Honda. You may be asking right now, why look at gross profit? The reason I like to look at this is that it shows what's going on in the factory. See, a gross profit is just revenue minus the cost of revenue, or effectively, how much do you sell the car for minus how much does it cost just to build it and deliver it. This cuts out a ton of additional costs like R&D, sales staff, legal staff, and a bunch of others. If you can't make a gross profit, something is likely very wrong with the manufacturing process or your bill of materials. So, if you start scaling up a loss on a gross profit, it will usually just become a bigger gross loss. Now, in all of this, we've had IPOs recently from Rivian, Fisker, and Lucid. I decided to look at their growth relative to their IPO year. This is what we have for real inflation-adjusted revenue. We immediately see that Rivian is growing revenues at a faster clip than Tesla was at the same time relative to the IPO, which at first glance kind of looks like a win. But then we go back to the gross profits post-IPO and see that Tesla not only was gross profit positive all year since their IPO, but these other players have alarmingly negative downtrends in their inflation-adjusted gross profitability. To wrap up, I'll examine the debt-equity ratio for all the discussed companies. This ratio takes a company's long-term debt plus the current portion of its long-term debt divided by its shareholder equity, essentially showing how much of its growth is funded by debt versus its own resources. A higher ratio suggests more financial risk, especially during economic downturns. Notably, Tesla has the lowest ratio among the companies we've reviewed, indicating better financial health and lower risk relative to others. Despite all these awesome numbers, critics have also criticized Elon Musk's hands-on approach. Yet, from my own personal manufacturing experience, having been in the engineering leadership development program of one of the world's top 3 aerospace and defense companies, I personally understand the dedication and challenges you have to overcome to excel in manufacturing. Watching Elon Musk tour the Fremont factory with Marques Brownlee without any assistance completely confirmed this for me. This level of detail is amazing. It's not typical even among top site managers, much less among CEOs. If you have 15 minutes, watch this tour. It's a revealing look at why Tesla is the most profitable per dollar of revenue of any automaker in existence for 2023. Yes, you heard that right. This is also why Tesla has been the most profitable of literally any automaker I can find when you average the last 3 years of net profit margin. This is 25 publicly traded auto manufacturers here. Let that sink in. As we stand today at the end of April 2024, Tesla's stock has dipped nearly 53% from its peak. But understanding Tesla's journey and Musk's resilience under the most intense pressures suggests to me that this is just another chapter in their story of innovation. Tesla's recent Q1 2024 earnings disappointed many and contributed to this stock drop, as Elon Musk has also warned of a substantial decline in deliveries this year. With such grim headlines, how do we gauge Tesla's real value? This is where the DCF, or the discounted cash flow analysis, comes into play. Think of the DCF as a financial time machine. It helps us determine what Tesla's predicted cash flows in the future are worth today, considering all the risks and the time value of money. See, due to inflation, $100 1 year from now is not worth as much today. So we take the cash flows of the future and discount them into today's dollars. Remember that old saying that a bird in the hand is better than two in the bush? That is exactly what a DCF is doing, just using math. I calculate DCF using owner's earnings, which is operating cash flow minus maintenance capital expenditures. This is a method inspired by Warren Buffett. Because Tesla doesn't specify its maintenance capex, I use a method from Bruce Greenwald of my alma mater, Columbia University. This helps us analyze Tesla's financials with better precision than just subtracting out all plant, property, and equipment costs. I've modeled everything from Cybertruck rollouts to potential impacts of the new Semi, Model 2, and Gen 2 Roadster, using all kinds of historic data and trend analysis to predict Tesla's future. After adjusting for inflation and projecting future ventures, I've determined Tesla's DCF value is $205.39, basically $205. So let's discuss what this means for investors. This value is a snapshot of what Tesla might be worth today. Yet, in high growth scenarios like this, a margin of safety is an absolute must. The margin of safety acts as a buffer against the unpredictable. For Tesla, I set this buffer at 25% for my consider buy level and 50% for my strong buy level. This is exactly the same as what an engineer does when designing a new product. In engineering, it's called a safety factor, and the 50% level is the norm. Think about a ladder that breaks during testing at exactly 400 pounds. Then think about people's tendencies to push things to the absolute limit and the additional tendency in nature for shit to happen.
It happens. What, shit?
Yes, it does. And this is why we factor in a safety factor in engineering, or a margin of safety in investing. So, in the ladder scenario, we rated it 50% for 200 pounds. Then, when some jackass decides to have a party on the ladder, there's a slightly better chance they don't bust their ass on the ladder that you just rated for the exact weight it would get destroyed at. This strategic approach places Tesla as a consider buying at $154 and a strong buy at $103. Investing without this buffer is risky, akin to skydiving without a backup parachute. It's about managing risk intelligently and benefiting from Tesla's potential upside without bearing the brunt of a full downturn. And speaking of downturns, there are a few extremely critical things we need to address about the current economic climate as it stands in April 2024. Let's start with this inflation trend chart. We're seeing rising inflation expected to hit 6.2% annually if the last 4 months trend continues. This could result in rate hikes rather than the cuts many hope for. Next, I want to show you an often overlooked metric, that is CEO resignations. This stood out at me before the last major crash in 2020, when I saw this article that showed that an all-time record number of CEOs had resigned in January, and that 2019 had also broken the all-time CEO resignation record. This was Tesla about 1 week after that headline I just showed. And then this was Tesla 3 months later. We now are not only revisiting these prior records, but totally exceeding them. 2023 ended up being an all-time record year for CEO resignations. February was an all-time record-breaking month. And out just a few weeks ago on April 25th, we see that this most recent March was the highest number of CEO departures ever for a March. And Q1 2024 is the highest number of CEO resignations of any Q1 on record. Another one is the inverted 10-2 yield spread, historically a recession predictor. Notice, whenever this chart dips negative, within a few months, you have these gray bars. Those gray bars there represent previous recessions. When you consider that we have have been in a prolonged inversion right now, this is a strong signal that we should be cautious. Next, we have the year-over-year percentage change in the Industrial Production Index, or I call it the IPI, which has recently dipped into negative territory as well. Like the 10-2 spread, when this dips negative, you almost always tend to see recessions coinciding with it. Considering we are now seeing negative numbers, this is another flashing alert for the economy. This has all alarmed me enough that I decided to sell my stock holdings just recently on April 5th. I see the market has come down a bit since then, and my honest opinion is that it has further to fall. Despite these crazy overall market conditions and Tesla's near-term bumps in the road, Tesla's innovation and market disruption are undeniable. They are literally kicking everyone's ass despite the recent stock drop and the slowdown in deliveries. I'm closely watching for an optimal entry point, and I am extremely confident in Tesla's long-term potential. If you're intrigued by Tesla's journey and want the latest updates on when I decide to buy some Tesla stock, make sure to like the video and subscribe. Any specific stock stories you want me to go into, drop them in the comments below. I'm literally busting my ass to put out quality content, and I'm determined to make this channel the most badass channel for stock info on YouTube. More insights on Tesla and other innovators like it are just around the corner, and trust me, you won't want to miss the next stock story. Until then, remember me telling you before about a life of couch surfing and heaping bowls full of ramen noodles? Well, that all still applies.